Good morning, Port St. Lucie. Welcome back to another episode of PSL Daily Download, your first stop to all things real estate in Port St. Lucie. We got a great show for you. We're going to talk about inventory, the market. We'll see where the rates are at. And then also, I'm going to end up with an article from Realtor.com's website around assumable mortgages. So I'm going to go over that. I get that question quite a bit. And a lot of buyers think that it's very beneficial, and sometimes it can be. So I'm going to kind of touch on that and maybe answer some questions regarding that. So before I jump right in, today is June 18th, 2024. Happy Tuesday. Hope you're having a great start to your week. So let's dive right in. So inventory, not a lot going on. Kind of keeps going up and down, but the big movements here are going to be your properties under. Let me see if I could scroll this down just a little bit. There we go. Under 375, we'll see that inventory is actually coming down. It's down 5% right over there. And then properties that are being listed with a reduced price have gone down almost 4%, sorry, at 3.96. And then properties that are being listed for rent continue to increase. And this has been a trend, sometimes faster pace, sometimes slower. This month is at a slower pace. But the inventory on rental properties have actually increased by 4.441 from the beginning of the month. So again, we're really not looking from one day to the next, but more of trends. And the trends on all of these continue to be the same, including the main bucket for overall inventory continues to grow just at a very slow pace, which is understandable at during this season, right? During the home buying season, which is very busy, and properties that do come on, and more properties come on than normal, but they're also coming on. They're also coming off, so kind of balancing itself out there. So let's go to Mortgage News Daily Rate Survey, and let's see where they had the rate as of the last close date, which was Monday afternoon. They had the 30-year fixed rate at 7.04, which was up 0.05%, and the 30-year FHA at 6.50, up 0.06%. I am already getting rate updates this morning, and it looks like the rates or the pricing on the rates are up about 6 basis points, give or take. So not a big movement, but nevertheless going in the wrong direction here. So CNBC's U.S. Market Watch, mixed market, not a lot of movement, literally. Very small changes we can see right over here. The 10-year Treasury yield, the U.S. 10-year Treasury yield is at 4.254, which is down 0.025 or 0.584%. And that actually just jumped up because it was really, I think it was like 0.002 just a couple minutes ago. So quite a little bit of movement over the last few minutes. We'll see where that continues, but that's on the better side coming down. So we'll see if that trend continues. If it does, hopefully we'll get better pricing for on the to the better side, right? All right, so let's jump into realtors.com website, and they have this article, and it's not an article, it's basically kind of informational for informational purposes on the assumable mortgages. So I'm going to kind of go over because it kind of touches on good information, especially I do get questions from buyers, I get questions from realtors trying to trying to find their buyers the best deal out there. And sometimes listing agents want to know how it works because their seller may actually have a mortgage that's assumable or maybe assumable. So I'm going to go ahead and jump right in and kind of go through. I'm going to try to go through this whole thing. So hopefully I'll try to go a little bit fast here and not take too much of your day. But let's get started right over here. So this is the overview of assumable mortgage, and I'll kind of keep going back and forth to make sure it's on the screen for you. All right. So only about 6% of listings are eligible, and in most circumstances, must either be on FHA USD or VA loan. The interest the interested buyer has to meet the qualifying criteria of the original loan to assume the mortgage. Now, and actually, I should have probably said this at the beginning. The reason why somebody would want an assumable mortgage, and this was really popular in the early 80s, is let's say somebody has property and they financed that at 3%. Now they're selling it, right? But the buyer now has to go get a mortgage on their own, buy that same property. Well, the rates are definitely a lot higher. So let's say they either have an option of getting a 7%, right? or not, maybe not buying it, or maybe they have an issue qualifying. Well, an assumable mortgage, if it works, and again, we'll talk about that here in a second, they may be able to assume that 3%, giving them, a lower monthly payment, a better, better overall terms for themselves. But as we're going to find out, there are some pros and cons. So that's the benefit. That's the reason why. As for the seller, the benefit to them is going to be that they get a buyer, right? They don't care how they get the financing, but if they're able to help them with an assumable mortgage at a lower interest rate, it might get the property off MLS a lot faster. So, all right. So I'll continue there. Sorry about that. I should have probably said that at the beginning. Okay, so let's go to the next bullet point here. Market conditions don't always make assuming a mortgage the right move. For instance, if a home's value has significantly appreciated since the start of its mortgage, the buyer might owe the seller enough to cancel out the benefits of the lower rate. So, and that's actually kind of what I've seen today, because there's a lot of, at least right when the rates went up in 2022, there was a lot of push for assumable mortgage, and then people found out they're like, well, I'm gonna have to pay 300,000 in cash by that, to get that assumable mortgage for 200,000, because that's what all the original owner, you know, owes on the mortgage. So it didn't make sense, and it doesn't make sense in a lot of cases because you still got to come up with this big lump sum at closing for the down payment, and it's sometimes not beneficial. All right, or maybe the buyer just can't do it, right? Because it's hard. It's hard to come up with those big down payments. All right, pros and cons. Let's go hit some pros. Get a lower rate, lower upfront cost, right? Because the mortgage is smaller. Shorter loan life because somebody's been paying it for a little bit. Long-term savings, right? Cons, very few qualify. Lenders can be slow to act. Buyers must use seller's lender, which sometimes that's an issue by itself. Buyer might need a second mortgage to cover home increased value. So that bigger portion of the down payment, maybe they don't have it, they would have to look for a second mortgage. Then it gets complicated, right? Because now the first mortgage lender has to factor that in to see if you qualify for that original mortgage. So anyway, sometimes it could get complex. And the one thing that I've heard is, hey, if it's an FHA or USDA or VA, you could definitely do it. That's not always the case. I've actually seen and heard of situations where it's because of the investor. When they do these big securities on these mortgages, their agreement might be that they will keep this mortgage for X amount of time. um, and look, these lenders want to get those 3% off the book. Let's be honest. They want somebody to, they want that 3% to get paid off so they can have the funds to go lend it at 7%. So, acting slow, things like that, they're not going to make it easy. They're not, it's not to their benefit. Maybe to the buyer's benefit, but not to the lender's benefit. All right. Frequently asked questions. All right, what type of loans are eligible for an assumable mortgage? FHA, VA, USDA loans are eligible for assumable mortgage. If I speak a little bit fast, again, I'm not trying to take up all your day here. All right, FHA loans, USDA, I'm not going to go through those, and VA loans. And again, you have to check with your lender. If you're a seller, check with your lender prior to listing that benefit on the MLS. All right. All right. How does the down payment differ from a traditional mortgage? The buyer has to make up the difference between the current balance of the mortgage and the current value of the home. So if they owe the mortgage is 200 and they're selling the property for 400, well then they have to come up with that 200,000 cash, right, to close or maybe get out another mortgage. So that way they could assume the other 200,000 to complete the $400,000 purchase. For example, if the seller has a $300,000 mortgage, and the house is valued at 500, the buyer needs to have 200,000 to put down and take out a second mortgage to cover the difference, which I just went over. All right. What's in it for the buyers? A lower interest rate, fewer upfront closing costs or upfront cost, a shorter loan spent life, long-term savings. Let's see what that one is about. Get a more detailed rundown of a potential savings with our online. So you could, it depends basically what they're saying with that. Either use their calculator, but it's just going to depend on how much you're going to save. What's in it for the sellers? If you bought your home at a substantially lower rate than is currently available, offering an assumable mortgage can really sweeten the deal for prospective buyers, helping you close faster if that's a priority. All right. Any other watchouts? Yes. Even if everything else lines up, another thing to be considered is responsibility. The original mortgage holder can be held liable if the assuming party defaults. Holy crap. So I read everything except for that last line. I did not know that. That's huge. I would probably bet 99% of people do not know that about assumable. I did not know that. That's so you sell your house, the other guy can't pay the mortgage, maybe you're liable? Holy crap, that ain't good. Yeah, I might not do that. You know what? For disregard all that, but actually, it's very important information. So, um, yeah, I'm kind of shocked about that. So I don't know how accurate that is. I'm assuming Realtor.com's information is correct. I did not know. I was not aware of that. But so I learned something. Hopefully you did. If you learned something, I don't care if it was that one little line. If you found that interesting, if you found that valuable, please click that like. Please subscribe right down here for more information. Okay? Click that little bell icon right there. That way you're notified when I put up my next video. In the meantime, I'm going to put a video right there for you. All right? Hope you learned something with me today. Have a good day, guys. Bye.